Troy Sage.
And I'm Andrew Smith.
Sometimes.
Sometimes.
Yeah, sometimes you're...
Sometimes I'm not.
Right.
Sometimes I'm Troy Sage.
Yeah, that's...
All right.
No.
Today we're going to talk about short sales and income, seller's income. It's a question that we have received a little bit more frequently lately.
A lot.
Yeah. And it goes into what actually is classified as income and how, if a seller is not just a standard W-2 employee, how is their income calculated?
Well, how is it?
Well, you've got a couple of different situations, and the important thing to know on income here is full disclosure is key. You have to disclose everything to the lender that you're submitting the short sale request to. So with regards to income, if you are a standard W-2 employee, it's really fairly simple. In that particular case, if you make $60,000 a year, you get paid $5,000 a month, your income is $5,000 a month. You know, you've got the pay stubs to prove it.
Simple.
You've got the W-2. Very, very simple.
It starts getting more complicated when you got waiters and waitresses and people with tips.
It does get more complicated when you've got people with tips. It also gets a little bit more complicated when you have people that are either partners or sole owners of S-corporations, LLCs, partnerships, and they may get a W-2 for a partial portion of their income, and they may take draw distributions.
Right. And
then at the end of the year, they're getting a K-1.
But they might get paid cash. I know some contractors get paid cash.
Exactly. So at that point in time, it's like, how do we figure all of this out? So in the case of an S-corporation and LLC, one of the questions that we get all the time is, okay, I get a W-2, I get a paycheck, and let's just say it's in the amount of $4,000 a month. Very easy. Your W-2 wages on the financial statement that's prepared show $4,000 a month.
Right.
Where it gets a little bit more tricky is they will turn around and say, yeah, but I also get draw distributions, and you know, some months they're 4,000, some months they're 5, some months they're 7. It really depends. Where do I put the draw distributions? You don't. The draw distributions, it's not that we ignore them, but they're calculated in a little bit of a different format.
Because it's not really considered income.
Not
because
really.
It's more of it's a draw from the business, and
Correct.
The business is a separate entity.
Exactly. So at that point in time, here's what we recommend, and this is following the guidelines that we've received from the banks. Without getting overly complicated on tax issues, draw distributions from a company do not affect that company's income statement. They are not an expense.
Right. They
are what is known as a balance sheet item.
Right.
Okay, so in that particular case, here's what you would need to do. If you own a company, an LLC partnership again, you would run a profit and loss statement, an income statement. So, if you're looking at 6 months of the year, you would run a P&L for January through June, for instance, and you would look at what it says the net income is. Again, using round numbers so it's easy. If the net income of the company is $60,000, and we're 6 months through the year, 60,000 divided by 6 shows the company has an average income of $10,000 a month. That number will go on to your financial statement. You would now show $10,000 a month in income from the company. You would show $4,000 a month as your W-2 income, showing 14. And a copy of that income statement must be submitted with the short sale package to the lender.
Right, it's full disclosure. Now that 60,000, what you're talking about, is net income.
Net income.
Okay, you're not talking about if the company brings in 60,000, say $10,000 a month, and at the end of the month is actually only making $3,000 or $4,000 because of overhead or cost, then you would adjust accordingly. So remember, it's net income. It's not gross income.
And if you're doing books yourself, whether you use Quicken, QuickBooks, Peachtree, any of the software programs out there, or you have a bookkeeper, they will be able to run an income statement for you that's going to show revenue received, all of your expenses deducted, for a net income amount. It's that net income amount that the banks are going to look at.
Absolutely, and you got to put it all together. So those that have companies set up, your accounting's a little bit skewed from the norm, from the standard employee that gets paid and then does their simple tax returns.
Exactly.
You're going to most likely have a CPA or a tax preparer involved. It's simple to give them a call and say, I need a P&L statement, and that has to be added to your financial statement.
Exactly. Now, again, without going overly complicated, if you are a 50% owner and you've got a income statement that shows, again, $10,000 per month average. If you're only a 50% owner, you're only going to show $5,000 of that. You're going to take 50%. And again, to prove that you're only a 50%, in your tax returns there should be a form known as a K-1, which is a distribution of income to shareholders, and it will show your ownership percentage. So it will show right there. So again, all of the documentation that's provided makes a very good, complete package for the banks to look at. And that's how income is classed in those situations.
Yeah, again, it's full disclosure. So and don't think for a minute that the banks aren't going to find it.
No, absolutely.
I've got horror story after horror story where I've had a homeowner and we're not in escrow. We're negotiating the short sale, and I've interviewed them thoroughly and been working for a couple of weeks together, and they have no money, they have no money, they have no money, and all of a sudden the bank comes back and they want this huge promissory note for $60,000, $70,000, and I say, how can that be? They don't have any income. And then the bank very politely sends me an email and says, unfortunately, this individual did not disclose the fact that they have 2 business accounts set up for their business under their same Social Security number.
Yeah, so it's going to be found. So again, full disclosure is key. I'm touching on that. The other thing with income, what we've just talked about here is wages income, but there's other types of income that would also have to be disclosed. Whether it be a one-time infusion of cash, it could be a lawsuit settlement, life insurance money, an inheritance, something like that.
They win the lottery?
Exactly.
Right.
Something like that could suddenly hit your account. Does that automatically mean that the short sale will be denied? No. But again, you have to disclose the income.
Right.
Okay. And also what we recommend in that particular case is you will want to write and sign a letter of explanation. You're going to want to give the bank information on where this money came from, what the source of it is, and what it's going to be used for. So in some cases, it may have been an inheritance, but there could be another property involved, and there's other things to pay, and you're not actually getting that much money. Just disclose it. Write a letter.
Yeah, it all comes back to full disclosure. You know, something great happens, like you win the lottery or you go to a casino and win some money, and you put that money in your account, or even if you don't, you're going to get W-9 on it. 1099, I'm sorry, you're going to get 1099 on that. The bank's going to eventually see that. So you just disclose, hey, I went to Vegas and I won $30,000, okay? And they're going to want to know what casino it came from and what the money's then going to be used for.
Exactly. The reason we say, disclosure now is better, if that means that the bank are now going to want a cash contribution or it's a promissory note, it's better to get that on top of the table now so that you know where everything is. It's clean. When the sale is done, you walk away. Don't think for a minute that the banks aren't going to go back and audit these files. They are going to check. They're going to run references on that. And if they suddenly find out that during the course of that sale or somewhere around it, there was an infusion of cash that was not disclosed, they're going to think fraud was committed, in which case it was, and they're going to come after you.
I can tell you for fact, and I know we got to cut this video off, it can go on for an hour, but I know for fact that I had this happen to a client that did not fully disclose, and we got the short sale approved, and the bank found out not very long after that they had money coming in that they didn't disclose, and they are absolutely going after this individual. They are not playing around. It is fraud.
Yeah, it's not even worth it. So trying to hide, to try and save a few bucks here and there. I know in most situations the homeowners are in desperate situations. They need out. They're trying to get as much as they can. But those decisions that you make now are not worth the penalties that can come back and haunt you months or even years later.
Yeah, full disclosure.
Full disclosure
is really the bottom line.
Again, anyway, you got any questions, comments, suggestions, visit us at s2neg.com, and we'll see you next time.
Make it a great day.